What's going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So, some big news regarding MPW stock. I'm going to go over a few things, the trends, the earnings report, and what I plan on doing. So, they've been through a lot, a huge gauntlet, and this is a big problem. So I'm going to go over some pros and cons. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. Smash that like button. Let's check out MPW right now. So MPW has been taking a hit. And when the pandemic started, there's a lot of things going against them. One, they owed a lot of debt. Two, it's the pandemic. People did not want to go to rehab facilities. So that kind of hurt them revenue wise. And I mean, look, I still am a fan of medical properties trust, but there's some trends that are issues right now. So look at this decline in the past 5 years, 78.76%. The past year, it's been down 62.90%. So the S&P 500 is running circles around it. Average volume is 21.20 million. The market cap is 2.30 billion US dollars. Its year range is 292 to 11. Ooh, past year that's a big drop. Day range 360 to 387. Previous close 369. So let's go over them a little bit in detail. The first positive is they have size. They're big. So they own hospitals in 31 US states, 7 European countries, and South America. So 439 properties, 64.3% general acute care hospitals, 14.1% behavioral health facilities, 7.9% inpatient rehabilitation hospitals, 1.5% long-term acute care hospitals, 1.2% freestanding ER urgent care facilities. All these are in demand. So that's one positive thing. People are getting sicker. There's a rise in mental health. Those are huge. And with their size and being a REIT that internationally is, I still think it's pretty big. I mean, 43,000 licensed beds, 9 countries. That's still quite impressive. So, but they have a few things going on. I'm going to jump to the revenue trends right now, and then I'll go over the press release. So this is annually in millions US dollars. 2016, 541, 2017, 704, 2018, 784, 2019, 854, 2020, 1,249, 2021, 1,544, 2022, 1,542, and 2023, 871. So there's a decrease in revenue, which is a problem. I mean, how are you going to grow your dividend? How's the FFO going to be doing well? How is it going to get my confidence as a dividend investor? Look, I own them when they were doing well, and before all these red flags popped up. But you know, the pandemic was part of the problem. They were a little just behind on money, and I really do think part of the problem is people weren't going to skill rehab facilities because they were scared to death of getting COVID, and that was part of the problem. I could be wrong, but I can tell you, being a registered nurse and working in the hospital, nobody wanted to go to rehab because they were scared to death of getting COVID. So I'm going to jump to the most recent revenue trends. There's a few problems right now. The revenue has gone down 136.95%. Quarterly net income was down 372.64%. It was negative 663.94 million. Diluted earnings per share was down 1.11. It was down 362.5%. We have some problems. Okay, earnings per share missed by 501.93%. Revenue was a miss 150.37%. So I'm going to go over a few more things. Came out with quarterly funds. It's also on Yahoo, so they probably paraphrased an article from Zacks. Medical Properties Trust came out with quarterly funds from operations of FFO 36 per share, beating the Zacks consensus estimate of 27 per share. This compares to the FFO of 43 cents per share a year ago. So the quarterly report represents a FFO surprise of 33.33%. But the problem is it did go down from 43 to 36 cents. So that's an issue. Okay. So sure, their consensus was it was going to be a nightmare, but still, it's down. That's a big problem. I'm going to go to a few more things. This is on their website. Included, the NFFO is approximately 12 cents per share of revenue from Steward Healthcare System, recognized prior to moving to a cash basis accounting effective January 1st, 2024. So that's not good. So Steward is a big thing, and because it's a big hospital system. So, with regard to Steward, I'm just quoting Mr. Aldag. We are encouraged by the amount of interest received to date from the other hospital operators from the mission critical facilities. We expect this real estate portfolio will either resume its contributions to earnings or become additional sources of liquidity as the year progresses. So, I just want to go over my thought process as well because of these issues. So, one thing I found also on NECN.com, elected officials have been pressuring Steward, the owner of 9 healthcare facilities across the state, including Kearney Hospital in Dorchester, to turn over the financial records, but so far the Dallas-based company has failed to do so. The for-profit healthcare system is reportedly $50 million behind in its rent, and employees say Steward is not paying their vendors, so they've been short on supplies. They also say construction on the Norwood Hospital that flooded in 2020 has come to a halt because it's not paying the contractor. So there's some red flags going on because of Steward Health. So I'm going to jump to the dividend history. And look, when things were good, things were good. So look at 2015, quarterly dividend, 21 cents, and then 22 cents. And then 2016, 23 cents, 2017, 24 cents, 2018, 25 cents, 2020, 26 cents, and then 27 cents, and then 28 cents. And it was at 29 cents in 2023. Then they cut their dividend by half. So per Zacks, Medical Properties Trust announced November 9th, 2023, that shareholders as the record of December 6, 2023, would receive a dividend of 15 cents per share on January 11, 2024. MPW currently pays investors 60 cents per share, or 15.63% on an annual basis. The company increased its dividend 4 times in the last 5 years, and its payout has declined minus 3.85% over the same time in the period. MPW's payout ratio currently sits at 38% of its earnings. So they got some issues. Okay. Honestly, I think what they should do, this is me, this is not financial advice. I may be completely wrong. They should suspend the dividend until they get their act together. I think that would be a good thing for them. Instead of distributing money, try to figure out what's going on and go from there. Because Stewart seems like it's a mess right now. And, going off of that article and going after these dividend trends and the revenue trends, there still is hope for Medical Properties Trust. The pandemic and all this stuff has really screwed things up for healthcare, for facilities, and for Steward Health. Steward Health was probably in good shape before the pandemic, and all this stuff added up. So all this stuff increased. Now, could they get a bailout from the government is one thing with Steward Health. That's one thing that I'm wondering they could possibly do if they would get that granted. I don't know if that's possible, but that's one thing that could maybe save Medical Properties Trust from getting in worse damage. So I don't know if that would happen. I'm going to hold. Yeah, I'm sorry. If I was a shareholder right now, I don't have any shares. I would probably tax loss harvest. I'm closely watching them. I did sell them when things started going bad. I took maybe like $100, $200 hit or something like that, and then I did a little bit of tax loss harvesting. But right now, I'm going to closely watch. I'm hoping they rebound because I really love REITs and real estate investment trusts. Um, there's some things going behind the scenes. They're in court with some people, and it's going to be very interesting. So I'm just kind of spewing out some stuff. Um, so that's kind of what I see with Medical Properties Trust right now. So right now, just I'm not buying. And again, all you guys in the comments, I'm not buying. I did a previous video on this. I am not buying them. I'm just closely watching them, and I hope things go well. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I will have a video for you tomorrow. Take care and have a great Sunday. And I'm going to jump to my disclaimer. So as a reminder, this is a disclaimer. Do not use this YouTube channel for any form of financial advice. This is strictly for entertainment purposes only. I do not own any shares of Medical Properties Trust, and I do not plan buying any shares of Medical Properties Trust. It is best to seek financial advice from a financial advisor or somebody certified to give financial advice. I am not certified to give financial advice, and I don't give financial advice. This is also, do not use this YouTube channel for any form of tax purposes. So just be aware of that as well. Go speak with a tax advisor. Investing is a big risk, so you have to make sure you do your due diligence and make sure that you cross your T's and dot your I's when it comes to investing, as well as making sure that you realize and you can lose money with any investment. So take care and have a great Sunday.